All right, one, two, three, testing, testing. Can you guys hear me? Yeah, I guess you can, right? So what's up? How are you guys? Mm, yeah, I guess you can, right? All right. So yeah, let's have a look at what we have here now. I am short gold. My overall risk in this trade is 1%. Yeah, thank you, Asan. I am fine. Yeah, I'm fine. Just starting off my week, 4:22 a.m. here. So, a couple of things here about this gold short. Um, Hold on. I am just watching this at the moment. This is such a strong level, right? Such a strong level. So, my idea here, of course, was a reversal in this market at the break of the Asian session lows. Right, stop losses were above the highs. I moved my losses a little bit higher at the one 1850, which is fine. Right now, if I get stopped out of this trade, I will be down about 0.9%, and I am going to try to go short again a little later. So, I mean, it really doesn't matter what happens because the decision to take that trade was already made. So, if we look at the one in the chart, guys, I mean, this is what I dig about this trade too. So, this is the 1 minute chart right here. I'm gonna delete this indicator just for a second. Right, so we have the fakie above the Asian session high, right? And also here we have a strong supply zone. So this is my first trade of the week, and hold on, 3 minute chart. This is what I'm doing now. Now, if I get stopped out of this trade, my stop losses are right here. I'm gonna show you exactly where my stop losses are placed. So, my first short was here at the break of the Asian session lows. My stop losses are here at the 1918.50, I'm sorry. And I got trigger short again here, right? So overall, I'm risking about 0.9% on this trade. Yeah, I do like a ton this setup. Such a strong level here. And if you look at the 1 minute chart, guys, again, just have a look at this. I mean, I don't have level 2 data to show you right now, but it would be cool to look at some level 2 data of what's going on here because here there was a ton of selling pressure. So yeah, that's gold. I'm gonna leave it behind, because I'm already in that trade, right? Now the UK 100 or the FTSE long. My long idea on the FTSE is quite straightforward, right? Quite straightforward. This market is super strong, right? Super bullish. Now, what I'm looking at here, I'm going to change my FTSE here. Boom. Yeah, so basically, first of all, let's go to the 5 minute chart. I'm going to pinpoint that supply, that order block here. Right, here's the order block that I'm looking at. Hmm. So let's see if we have an order block inside an order block. Mm, actually, hold on. Let me see where my entry is here in the FTSE. Because I might be a little too low. Hold on, let me just look for this. Okay. So on the 2 minute chart, lower time frame order block here it is. Now, the reason that I'm saying this is because if you have a look at this, let me just delete this one. If you have a look at this, this is the 5 minute, demand zone, right? This order block right here, which was already mitigated, right? So I am not going to use this one. I haven't realized that until now, guys, until now. So I probably won't be using this one. Sorry, 3 minute chart. Actually, um, hmm. Yeah, I'm actually deleting my footsie longs. Oh yeah, I'm deleting this idea. I'm most definitely deleting this trade idea, even though it's solid, right? Let me show you. So this is the 3 minute entry that I was looking at. Mm. Right. So, we have a ton of sell side liquidity here, but also, what I just realized is that this order block was already mitigated here. So, when it comes to demand and supply zones, right, or imbalances, order blocks, etc., I always look for clean, yeah, zones, right, unmitigated zones, because once these zones have been mitigated, now my trade loses a ton of probability of one getting filled or two success. Why? Because if you notice here, this order block that I was looking at was already mitigated here, and that created that big move to the upside. Actually, I was looking at the FTSE before the open, and the open was exactly here. The open was exactly here, and I was looking at a possibility of getting long here on a small dip, right? But the FTSE opened super strong, and I missed it, so I am deleting that order. If you're a VIP, right, I'm going to send that to you right now. So let's have a look at the Japanese yen, because that's the other market that I'm looking at. So if you have any questions, just go ahead and type it on the chat. Uh, um, all right, let's move on. So I'm gonna keep the gold chart here. Leave a minute. Just yeah, just because we are in a trade, right? I'm sorry, my head is killing. So the Japanese yen. I was looking at possible shorts on the Japanese yen. Why? Because all right, let's have a look at the 50-minute chart, right? I mean, I don't know. When I look at the 50-minute chart, I don't know if shorts on the Japanese yen such a good idea. Now, the reason is because if we look at the last week worth of price action, last week, no, last 2 weeks, 3 weeks worth of price action since the low. I'm going to delete every single drawing here. Hmm. Oh yes, gold just ripped lower. Awesome. So I am going to keep my targets at uh, where they are. Phenomenal move in gold. Amazing. So Right now, because of my second entry, I am breaking even in this trade, right? Um, well, still is, I mean, we are not out of the woods just yet, right? In this trade, but it's looking good. I mean, it's looking good. I mean, the reason that I dig the downside in gold, I am going to, record the video for my VIPs. Actually, I haven't done that. So listen out or hear me out. Um, on why I'm looking at the short side in this market, right? Even though the U.S. dollar is quite bearish. Also, that's another thing that I'm going to look at on today's show, right? On this live show, U.S. dollar possible U.S. dollar shorts longs. I'm sorry. Let me see shorts. Yeah. I think I missed them, but let me just record this real quick. So, all right, traders, how are you? Let's have a look at gold and why I'm looking at shorts in this market. Right, even though gold has been very strong if we only look at the 10-minute chart and we only look at the previous base, which is the 1892.70, let's call it the 1893 or so, right? Gold has been reaping higher and higher, right? But now, what I dig about or why I am looking for shorts in this market is one, if we I'm sorry. Mhm. Go to a 2 hour chart. Actually, we need to go to the higher time frames, maybe 10-hour chart or so. Yep. Even higher, actually, 15-hour chart. If we go here, a gold has hit a massive key level in historic price action, right? So this base right here is what was capping the downside, you know, um, in March 2022, and now it is what's capping the upside in this market, right? After this big rally of about 20%, let's call it 19%, right? Without any clear or any big pullback, we have hit that level. I'm sorry. So if we go to a 5 minute chart, what I'm looking at here is gold, yeah, hitting that level and now breaking with this low. So remember that what I look for is always, when it comes to immediate sentiment, I look for breaks or changes in character, right? After price have been making higher highs and higher lows, the last higher low was broken with right here. Now, oh boy. Now, what I also like about this setup is that gold faked above the Asian session highs and broke again with the lows created before that. So right now I am short, right? If price moves above the 50, I'm gonna get stopped out, but I will, however, try to find another short opportunity in this market a little bit higher. Right, so let's move on from gold. It's a little bit crazy this market at the moment. I am, however, keeping my shorts here, right, guys? I am holding on to my shorts, both positions. Remember that, even though I have two positions running here in short gold, my risk is not even 1%. So I am completely and utterly fine with that. Now, Japanese yen basket, looking at the 10-minute chart, I don't know if it should be the best. I don't know if it's the best idea to look for shorts in this market at the moment. Actually, I mean, what I was looking at, to be completely honest with you guys, what I was looking at here was the break of the Asian session lows. But again, I missed that here. I mean, I missed this was the imp. I mean, this was perfect. Oh boy. All right, have a look at this. So, if you know me, if you know how I trade, you know that I trade inefficiency. I look for inefficiencies in the market, right? And I look for pullbacks towards those inefficiencies for my entries. That's what I do. That's what I look for. And here, even though it's a small one, I need to go even bigger. So here is that imbalance that I would have that I would have gotten in on a short position on the Japanese yen. So looking at this, I already missed this move. Let's have a look at the pound yen. Uh, um, Actually, there was no entry on the pound yen, euro yen. There was no entry on the euro yen. I mean, it's insane because there were absolutely no entries on any Japanese yen pair that I trade. Right? So shorts on the Japanese yen, of course, is longs on the US dollar Japanese yen, longs on the pound yen, longs on the Aussie yen, on the euro yen, etc., etc., etc. So, what I'm looking at here possibly are longs on the Japanese yen right here. Now, if you have any questions, guys, just go ahead and type it on the chat. I don't know if I am going to keep this show running for an entire hour. But you're more than welcome to ask anything, right? So, again, this is the Asian session range. Here we have that break of the Asian session highs. So I'm looking for longs more so because the Japanese yen is um bearish at the moment. And there is a ton of inefficiencies in price here. So I will be looking for 128. I mean, this is the level that I will be looking for. The 128 for longs on the US dollar Japanese yen. Um, right here. So this would in fact yield, of course, stop losses below the lows. This would yield a grade five, a grade 6R actually, 6.6R, and very possibly I'm going to place that that pending order right now. The reason that I'm looking at this setup, hold on, let me just confirm that what I'm doing is good and correct. Yeah, looking good, looking good, 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 good. So the reason that I am looking at this is one, all right. So the immediate trend is bullish, right? The immediate sentiment is bullish, right? The Japanese yen, which is the currency that I'm looking to trade here, is bearish. I just told you, right, that I missed that first move. Very possibly, very possibly, because of this break below these lows, right? And this buy side liquidity being built up here and this inefficiency in the market here, very possibly we're going to see a rally towards this level before another move down. So that is what I'm looking at as the highest probability setup on the Japanese yen. Right, because of this, because I'm looking for shorts on the Japanese yen, that is a second reason why I'm looking for longs on the US dollar Japanese yen. Right? Now, the other couple of things that I do like about this setup is this, right? A ton of liquidity that has been built up here, right here. Liquidity, if you don't know what that is just basically just look at it as the stop losses of weak players, right? Now, the reason that I look always for inefficiencies in the market is because 99% of the time, one, because the market always comes back towards those imbalances because the market has to be priced efficiently, right? Um, these inefficiencies in the market, in this case, for example, there were much more buyers than sellers, which created a gap in the market. So this gap needs to be filled. 99% of the time, those gaps are going to be filled. Now, you don't know, and no one knows if those, if these imbalances are going to get mitigated right now or later. So that's the the only reason that you not reason the only thing that you can't really know for sure, right? But it really doesn't matter because I mean if these imbalances don't get, I mean if these inefficiencies or gaps don't get filled, right, what's going to happen is that I'm not going to get filled on my loan, which is good. I mean, which is okay, right? Now, and also, looking at liquidity sell side, that also gives this trade or this setup a higher probability of success. Now, again, I'm looking at the 1 minute chart. On the 1 minute chart, there is a couple of other gaps, let's call it gaps in the market here. So which one of those two should I be looking to trade? I'm asking you, right? Should I be looking to trade the first one, the second one, or the third one? I'm just showing two, right? Now, the data, but my backtest data shows that um, more often than not, you know what? All right, so I'm not gonna show you my data, my backtest data because I don't do that. I don't show it. But about 59% of the time, I'm sorry, Mike. About 39% of the times, price is not going to feel or mitigate this inefficiency, the lowest one. But when it does mitigate the first one, more often than not, I will get stopped out. So I rather place my buy stops at the lowest imbalance with the possibility or probability of not getting filled on my trade rather than placing at a buy limit here with the probability of getting stopped out. So I rather not get filled than losing on a trade. Okay, mates. You have any questions or not? Because if you don't have any questions, I'm just going to shut this down. Oh boy. Seems a little premature for the gold short. I'm looking on 1925 zone. Giovanni Mac. Maybe. Yeah, you know what? I thought the same. Uh, uh all right. I was thinking the same, Giovanni. Right, but the past or um the last week I didn't get filled on my positions because I was waiting exactly what you are looking at. I mean, I don't know if exactly what you're looking at, but what I saw last week is that every time gold broke with the highs or the lows, right? It just kept on moving. So, for example, let me show you, right? Now I'm gonna use this. Yeah, so for example, when was it that I was looking for shorts? I don't remember. Mm-mm-mm. All right, so let's imagine. For example, here, gold broke with the highs and just kept on rallying without hitting my buy zone. Here, I broke with the lows and kept on dipping without hitting my sell zones, etc., etc. So that's why I decided to not use, a sell limit on my first trade, but a sell stop below the Asian session lows. Um, right here. Yes, I mean the trade got on a drawdown, but because my risk was so low, I mean I was even able to add to my position. So I mean, but that's me. You don't have to do everything that I do, mate, at all. If it doesn't make sense to you, you should absolutely not follow what I do. But if it does make sense to you, I mean, more power to you, right? So, hey Orlando, just a general question about gold and the dollar index, not specifically about the trade. I have usually found that as the dollar goes up, gold prices go down. Can you confirm, deny? So, yeah, what you're talking about is, you know, I don't look at, I mean, yeah, I, what you're saying is correct, right? The higher the US dollar goes, the lower gold might go. But I myself, I don't look at correlations in the markets to trade. I don't, I mean, I don't believe that correlations are as perfect to to put trading decisions on them, right? Yeah, you can look at it as a sentiment in the market in the sense that yeah, if the US dollar is rallying, right? You might not wanna look for shorts, for longs, I'm sorry, in gold, etc. But and also it also depends what is making the US dollar move. For example, um, during inflation data, CPI numbers, right? The correlation between the US dollar and gold is non-existent, and that is because gold is reacting to I mean, the US dollar is reacting to the inflation numbers, and gold is reacting to what the Fed is going to do against inflation. So it depends. I don't do correlations myself, mate. I was trying to send you an email, but it kept coming back. Can you please provide a valid email address? Just email support, mate. I'm not gonna give you an email. You can't contact me directly. Also, I'm never, ever, ever going to contact you directly, guys. There's a ton of channels in Telegram that use my name and our logo and ask for money for crypto investments or whatever. That's not me. You're going to get scammed. Where are your targets? Hey, Sandra. Bro, trading while at school gives me the best profit always. Well, I don't know what to say about that. I just find it funny. All right, so oh, the Japanese yen about to take out this liquidity. This is the US dollar moving lower. So have a look at this, right? All right, so have a look at this. The US dollar is clearly dipping right now. Now, how do you do this? I mean, when I say that I don't do correlations, I really don't do correlations. I don't even know how to place a second chart here. Yeah, I don't know how to do that. But we can place it there. So the 1 minute chart in the US dollar, the 1 minute chart in gold. Yeah, I mean there is a negative correlation or positive. I mean, in the sense of if you're looking correlation USD versus gold or gold versus the USD, right? It's the same fucking thing. But I myself, I don't do correlations. I trade the currency. And here in gold, my idea, right? I know it's a little bit, I mean, it's riskier than usual in the sense that the midterm in this market, the sentiment, midterm sentiment in this market is very bullish. But this break is just phenomenal, right? When it comes, when it comes to looking for. And this is not a reversal trade, guys. I mean, this is not a reversal trade in the sense that, if this was a reversal trade, I would have gotten short here, trying to catch that peak. But this is just basically a trend, following the immediate sentiment in the market, which is bearish, in my opinion. I might be wrong, I might be wrong. I might get stopped out. But even if I do, I'm going to look for shorts again a little bit higher. So there's absolutely nothing going on other than this. Um, all right. So, any questions, guys? If you don't have any questions, I'm going to shut this down. And yeah, let's look at the Japanese yen. Damn it, I really missed this one. The Japanese yen. That would have yield a nice 77, 0.77. But I might I might find some Japanese yen shorts. But I don't have a setup, other than the US dollar Japanese yen. Um, I am actually going to place this order right on the US dollar Japanese yen. What happened with this? Yes, I'm going to place this order on the US dollar Japanese yen. A nice setup. All right, so 128 will be 128. I'm gonna reach 0.5% on this one. US dollar Japanese yen. Yes, I do like this a ton. 128. So risking 0.5%. And I'm gonna place gold here. All right. Possibly we'll be getting stuff out of gold shorts. But you know what? Just have a look at this. Just have a look at how the bearish, the selling pressure at this level. It's just insane. I mean, um, I do like this setup a ton. Just have a look at this. The bearish pressure here is just insane. If I get stopped out, I get stopped out. This is a battle. Right now, what I could do actually is just close if I have a look at this, this is insane. The bearish pressure at this level is insane. So I'm fine with risking 0.9% on a short position here, right? And what I was going to say to you is that what I could do, in fact, is just close the last, the second entry, right? Close my second entry at break even, and just run with the previous shorts, but I am fine with it. I'm fine. I'm going to place this US dollar Japanese yen though. A pending order at the 128. I don't know about you, but I am fine with the risk on that trade. Oh, my head is killing me. So my targets are going to be at the 128.80, no, 128.75 for a what? 5.8 R. 5.2 R. Yes. All right. Any questions, guys? Hello, Rewind. How are you, man? All right. So I'm keeping this short on gold. If I get stuck out, that's fine. Again, I am thinking about what I told you, but you know what? All right, so what I told you is that I could, close the current or the second go short at break even, but that would compromise the profitability of this setup. So I'm not gonna do it. I'm going to keep the trade as is. You know, yeah, I mean, just have a look at this bearish pressure here. It's insane. Of course, that we also have bullish pressure uh, around here, right? But the sentiment in this market is bearish at the moment, so I mean, I'm okay with it. Um, what do you guys think about it? It's a buy limit. Mhm. I'm going to end the show with a Bitcoin trade. Not a trade, but a possible setup. 128. No, I need to go rest because I mean, I think, um, so 128, stop loss is, 127.86 and target is 128.75 for a 7.2 R. Um, Stop loss 127.86, 127.86. TP is at 128.75 was 5.21. Risk is 0.5% always. So this is a VIP trade. If you're not a VIP, you're not going to get updates on that. All right, so big bearish pressure. I mean, um, super bearish. I don't know what you guys think about this trade, but I dig it. I'm a newbie, so you guide me what is resetting and how you apply it in future trading? No, mate, I can't. I'm sorry. Just Google it. Do it yourself. You need to have a little bit of knowledge when it comes to my shows. I'm more than happy to help you guys out, but I'm not going to. This is not kindergarten, right? Again, you're welcome to join me. You're welcome to join my shows, mate. But, do yourself a favor and just hustle a little bit, right? Don't ask for everything, served to you. Shit. There's a ton of information out there, and, all the information that you need and you want is out there. Just, oh boy, I'm gonna get stuff out on gold shorts. Um, yeah, so just Google it and watch videos. I don't know. So let's have a look at Bitcoin. Mhm. 50-minute chart. Right. So looking for longs in Bitcoin, longs only. My entry is going to be here. Oh, very possibly. No, I might go even lower, mates. I don't know. This is way too early. This is way, way, way too early to place a buy limit in Bitcoin. Um, and you know what? The thing is, when it comes to cryptocurrencies, when cryptocurrencies rally, I mean, they just rip and rip and rip. So it's going to be very hard, for Bitcoin just to come back towards, or, come back towards the 19600 level or so. This will be my preferred entry actually here. So something like this. Uh, yeah, most definitely. I'm looking for a swing trade, right? So would be, uh, sorry, uh, uh, would be at least a 13R. But again, I am not sure about this. I'm not sure about this yet. But let's have a look at the other side of this market because this is a high that was already broken with, right? So this is a good thing because we might actually find some short-term shorts in this market. I am really not advising anybody to go to short Bitcoin or any cryptocurrencies. Actually, I am not even going to talk about this possibility because I, yeah, it's too risky. But you know what? We might have a possibility of going long at the 19600 level or so. All right, guys. Thank you for joining me. There's nothing too much going on. I'll try to go live again by the New York Open, if I can. Um, Trade safe. Always manage your risk, right? And never risk more than 1% per trade. That's just a bad idea, right? That's a bad, bad, bad idea. Because if you start risking a ton, I mean, also if you follow my trades, right? If you follow my trades, I mean, I don't put a ton of risk, right? In your positions, right? You already know drawdowns happen. And for example, I mean, I'm fine with losing 0.87% on this trade, but some people are just going to put 10% of their account in one of my signals, and that is a no-no. Right now it looks like I'm going to get stopped out on this gold short. I don't think I'm going to trade anymore until the New York Open. Right. Again, there's a ton of selling pressure here. There's a ton of selling pressure, but buyers seem strong. Buyers seem strong, right? And to be honest, this was my level. This was the last level that I was going to be looking for shorts in this market. If price breaks with these highs, I am most definitely not looking for shorts anymore. On the contrary, if I get stopped out between here and I'm sorry, and the New York Open. I'm sorry, guys. And the New York Open, I'll possibly be looking for long. I'll possibly be flipping long. All right, so for the New York Open, let's have a look at what we have. Last thing that we are going to do here. So, mhm, this is the S&P 500. This is the only thing I'm going to look at as U.S. equity goes. That's a big break. That's a big break of the Asian session lows. This was, hold on, what the hell am I looking at? Yes. Um, this was the open, right? Sunday's open. This is the London Open, very bearish. So we shall be looking for possible shorts pre-market. Now, there I'm not gonna go through the setup that I'm looking at here. Well, all right, I'll do it. So what I am looking for here is this, right? First of all, where is the order block that saw sellers jumping into this market and created that break? That's the number one thing that I will be looking for. Number two, imbalances in the market. We have one here. Very possibly we'll be looking at this, mates. Very possibly we'll be looking at this setup. Short in the S&P 500 around the 39.92.8. Stop losses above the highs. First targets here. 5R. Looking very good. This is actually what I will be looking on for the New York Open. Now, um, yeah, actually, the Nasdaq is looking much better, much better. So I'm going to trade the Nasdaq today here. Yeah, it's around the same risk to reward ratio as the S&P 500, but the setup is just way more solid. This is super solid. Right. So something like this. I'm going to try to go live for the New York Open, guys. I don't promise anything. Mm. But in any case, even if I don't go live, my VIPs are going to get this possible setup. Now, just before I go, right? I'm not going to place. All right, if you're not a VIP, just hear me out. I'm not going to place. Good morning, Tim. I'm not going to place a sell limit right now. I'm not going to do that. Of course not. Why? Because we are not even in pre-market. We're not even in pre-market. So, I don't trade pre-market, right? I just don't trade pre-market. Um, I'm not profitable trading pre-market, and I am not profitable trading, the sesh in U.S. equities, the London session breakout. I mean, it's the London session levels breakout at the US Open, right? I'm just not profitable trading that. So the reason that I'm not going to place hold on. The reason that I'm not going to place a sell limit right now is because of this, right? Yes, we have an order block here, we have an imbalance here, we have a strong low here, we have a break, etc., right? But pre-market gets wild. This is going to get very volatile, right? And I don't know, do we have? Is it today Martin Luther King's Day? That could influence my decision on taking. Yeah, we have U.S. holiday today, so I'm not trading the Nasdaq. Actually, you know what? Because we have US holiday, I might just place a sell limit right now because there's not going to be pre-market volatility. There's not going to be, I mean, there's going to be volume right at the US Open because there's still, US traders that trade from their home, right? I mean, but everybody's on vacation, right? So volume's going to be very thin. So the reason that I'm thinking that I might just place that sell limit, just to see if I get filled on it, is because there's not going to be a volatile pre-market and a volatile open, right? So Um, so because of that, and because there's still time, I mean, we have heaps to go for the London session. We might get that rally here, and just orders getting filled short. So I am going to place that on the Nasdaq, guys, on the Nasdaq. Oh yes, I am. Of course that I'll delete that order. By the end of the trading session, if there's nothing going on. But the setup is just so clean that that I just I mean I just want to take it. What can I say, guys? That's the reality. Hold on. All right, so. I'm going to zoom in on this chart and there you go. 11,505 or so. I'm going to risk again 0.5% and pending order. I forgot that it was Martin Luther King's Day today. Completely forgot. I mean, this is a 4 hour beauty of a trade and all right, so levels, fucking levels. Hold on. You know what? I'm not gonna give you the levels just for my VIPs. You have them. You have the main idea. 4R, 4.2R. I don't know. Risk 0.5%. All right, guys. Again, thank you for joining me. I appreciate you being here. Um, yeah, I appreciate you being here, guys. Yeah, about gold, I'm keeping my gold shorts. I mean, I dig that level. Such a big bearish pressure here. I don't know. I mean, right now it's a little bit. I'm gonna be honest with you. Right now it's a little bit of a gamble, in the sense that there's a ton of bearish pressure and buying pressure, right? But I'm already in the trade. Again, what I could do is just close my second short position right now around break even, but I'm only risking 0.19% on that one. And yeah, I'm gonna trade my plan. That was my plan. If I get stopped out, I get stopped out. That's fine. It's a small loss to start the week with. I mean, who hasn't before, right? Then the US dollar, Japanese yen. I dig this one too. I mean, the Nasdaq and the US dollar, Japanese yen are very good setups. Right here. Right. 4.4 hours. So yeah. So again, guys, thank you for joining me. Have a great day, and I'll see you guys tomorrow. I won't be live for the New York Open because there won't be New York Open. Cheers.